You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
What did your portfolio look like when you said, I've got enough, this makes sense, I can leave now? When was that, and what did that, like, I know you said 3 years ago, but what did that look like for you in terms of cash flow, portfolio wise?
Don't quote me on exact numbers, but I want to say I was hovering around, and again, most of them, so my first 5 properties I owned on my own, and then the next properties were all joint ventures. So ultimately, we were probably hovering around 35 properties, where that cash flow between those properties and JV partnerships enabled me to retire from policing. I want to estimate that we were probably producing around $10,000 a month cash flow between all of our properties, and that ultimately enabled me to leave the police department early after 10 years.
Was the cash flow, the $10,000, your cash flow, or was that still to be split with the JVs?
And that was my cash flow.
Okay. All right. That's pretty
so
good.
I was living on $10,000 a month, essentially rain or shine. I was making my 10K a month, and ultimately enabled me to grow from there.
Yeah. So you obviously had a little bit of your own experience. You did it with your own money, your own mortgages, right? Great income from the police, probably great credit. And then did that your own, then eventually hit a ceiling, get capped, right? Then start working with joint venture partners, creating that, repeating systems, those types of things. But what's the strategy? What was the first one? What did that look like? How did you learn about that? And then how did it grow from there? And are you still doing that same strategy, or have you evolved and changed in other ways?
Yeah, so we were buying, when we started out, we were buying turnkey properties. Again, all multifamilies, triplexes, fourplexes, and so on. And that's how we started. And we were buying turnkey when we started because we didn't have the systems and models in place and the contacts back 10 years ago. So we were buying turnkey, and we'd put our tenants in, we'd cash flow, we'd put our 20% down, and we'd move on, and then ultimately pull the equity out of the first property, put it on the second, pull the equity out of that one, put it on the next one. And we capped it about around 5 properties. And then 5 properties and forward is where we started to joint venture with other partners, if you will, where they were able to qualify for the lending component and bring in capital. And then we use that capital to build other properties. So we probably around 5 years ago, we really started to focus on the BRRRR strategy, which I know obviously you and Sarah are very familiar with that. And we focused on the BRRRR strategy in Hamilton. And it was very obviously lucrative and appealing to our joint ventures because we were able to circulate a lot of capital from one project to the next, to the next, to the next. So from there, my business partner, Sandy Mackay, and I started our own construction company called Vision Construction Management. And we started that company specifically to work strictly on our projects, as opposed to going on Kijiji and hiring a contractor or a general contractor. And so we all know everybody's got a bad story about a general contractor.
Yeah, you're not only making the system, you're controlling the system. That's amazing.
Well, that was our thought process. We wanted to really control that and give peace of mind not only to us, but our joint venture partners that, hey, we have 15 full-time employees on salary that work for strictly us and only us and just our projects. And then above and beyond that, we started our own property management company called Executive Properties. And that management company caters to our properties and our joint ventures and our clients' properties as well. So we really wanted to keep everything in the house as opposed to, you know, going outside of our circle. So we have essentially, you know, the knowledge of investing and investors and perfected the BRRRR strategy. We have our own construction company. We have our own property management company that we really just focus on fulfilling what we need and our partners' needs.
Awesome. I mean, it seems like a really good strategy. I just want to take a step back and ask you about the JVs, because at some point we all need JVs to keep scaling up, or we need to find ways to use private money and refinance, and it's a whole different ballgame. But question about the JVs, how do you structure them when it comes to the BRRRR strategy?
So obviously our joint ventures, they're relying on our expertise and our, I guess, the models and systems we have in place. So they're bringing the capital, and we're essentially a hands-free, hassle-free company that does everything from A to Z. So they're going to bring the capital. We're going to find the property. We prepare a detailed analysis on everything to do with that property, as far as, you know, purchase price, renovation, refinance projections, and then after repair value and after repair value rents, which will obviously dictate cash flow. Ultimately, at the refinance portion, we then become 50-50 partners on that property. So they own 50%, we own 50%, and we're responsible for 50% of the maintenance, the upkeep, any expenses that come along with that as well. Does that answer your question?
Yeah, I just want to take a step back. So like, how long do you have an exit strategy? Like, do you hold them for a certain amount of years and, you know, have a plan to exit at some point?
Absolutely. So we typically ask for a 3 to 5 year commitment. We're more of a long-term hold. But I look at it like this. I mean, we're batting 99% in 2019 and 2020 on extracting all of our capital. So if you have, you know, an asset, if you have that property essentially that you have no money in, you've extracted all your capital. Not only that, you know, for typically on a 4-unit building, we're cash flowing $800 to $1,000 a month on that 4-unit building. So we have no money in, we're cash flowing $1,000 a month. We have debt paid down from our tenants, and we have passive appreciation. I like to call that infinite return, essentially. So really, I mean, if the market's good in 5 years and our JV partner wants to sell, then we'll look at that. But above and beyond that, there's no reason to sell, because we're cash flowing, we have zero money in, we have debt pay down, we have passive appreciation, we have cash flow. So a lot of our partners are more long-term holds, long-term wealth, but we typically ask for a 5-year commitment.
And it is, you're managing a lot of it. And like you said, you have the systems and actual companies that you've named that you operate yourselves to put all these things off that feed off each other. It's that assembly line, right? And so out of all those pieces, you have your joint venture partners, you obviously have the clients that you're renting to at the end, your end user, your construction companies. How does that symphony work? Like, how do you put that all together? Like, how are you finding that great deal to pairing that up with the best investor and then putting that time effort? What's one secret maybe there, or one tip that you can share with the REITE Club Nation, that putting all that in place at the level that you're doing it, that they could put it into place?
Quite honestly, it's been 10 years in the making. This isn't something that happened overnight. It's been 10 years in the making of a lot of trial and error. I mean, it hasn't been roses since day one. We've all had our challenges throughout the process. So 10 years in the making of, you know, building, and you guys are familiar with this, having a strong team around you and the people you associate with investing and the people around you that are supporting you and helping you grow is super important. And we've been at it 10 years. So in 10 years, we've managed to grow those contacts, grow the right people in the right places that have helped us, I guess, get to where we are today. And we're sharing that with our JV partners in one tight-knit, I guess, business portfolio that, again, we've created a hassle-free, hands-free real estate investing experience.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.